Yeah, I'm losing my edge.
Because, Michael, we have a lot to lecture on today with split stocks and fractionalized shares and small exchange products. You came up with this title. I love it. Don't cry over split stock. And it's almost like it's a cry of joy for people these weeks. They're so excited about this split stock. I've got so many things to do now with Apple and Tesla, and not really something to cry over, though, right?
It's kind of a misconception that will hopefully will bust here in the next 20 minutes or so.
Nice, dude. Look at you. You're talking. Don't cry over split stock. You're referencing MythBusters now. God, you're a creative genius here. I might need to maybe fear for my job here in a second. But yeah, Apple and Tesla, they split their stock on Monday. You can access it so much better now. Tesla only cost $400. It used to cost what was it, 1,600 or whatever the hell. Apple, it only costs now it's only 400. That's very helpful for the everyday trader. Apple stock down closer to $100, was up above 400 there, and so all your problems are solved. The small exchange is going to shutter its doors, and all you need now is these split stocks, right, Michael?
Yeah, and these are the two most important stocks in the world. So what else could you possibly want to trade? I don't know who decides how many shares they split into, but yeah, the $400 is like, is he going back to the 420, taking it private? I don't know what he was going for there, but you don't increase access that much. I mean, to go from 2,400 to 400.
What's also funny, and this is actually, we're not talking about micro futures here today, but I saw the opportunity to make fun of micro futures, so I'm going to take it. They announced splitting the stock, right, a couple of weeks ago, and they're going to do with Tesla. Was it a 4-for-1 or 5-for-1? Do you remember?
I think 5-for-1.
5-for-1. All right, so they announced a 5-for-1 stock split, which puts this stock already here above $1,000, and then it tacks on another close to 100% in gains here between the announcement and when it splits. And the people who chose the 5-for-1 stock split are sitting there going, okay, we thought that it was going to bring it down from $300 to below $100. And now the thing is still going to cost people, or sorry, at the time it would have been $1,000 to closer to $200. And now it's still going to cost people $400, or when it was split, $500 to get in. And it's just like one of these things that and I actually feel for it, because the same thing happened with micro futures, right? Where they're like, oh, we're going to make a micro NASDAQ. Everyone's going to be able to trade it so much easier because the NASDAQ's getting larger. And then the NASDAQ immediately rallies. And it wasn't because the microification of the market, but the market ascended close to 50% this year. And it's like, oh, well, now your micro futures that are 10th the size are already too big for people. So I do feel for these people. It's like they can't have nice things. You know, they want to split the stock and then it ascends by 100%. And so what they thought was going to be 200 is now $400. And you saw the same thing with Apple here. I mean, not nearly as extreme, but a 30% rise between the announcement of the stock split and then when it actually gets split. The accessibility isn't really there at the end of the day, is what I'm getting at, right, Michael?
I agree. It's almost like why split in the first place? And the number of stocks, I wish I had the actual stats correct, but I'll give a ballpark. I mean, the number of stocks that are priced over $1,000 right now is, I think, the highest it's ever been. The number of odd lot trades being routed through equity exchanges is the highest number it's ever been. And odd lot is a quantity less than 100. So people can only afford, one way to interpret it, 90 shares of stock now, or maybe 50 shares.
Yeah.
So those number of odd lots are at all-time highs. It's like these companies almost refute the idea of a stock split, or if they do, it doesn't really work the way they expect.
And I'm glad that you brought up odd lots, because here's the oddest lot is taking it down to not one share, but a fraction of a share. And what I did here, Michael, was I took the price of Apple at January 1, 2020. And I said to myself, okay, I can buy as little as $1 worth of Apple with these fractionalized shares. This is amazing, but it's got its own pitfalls here, Michael. One is that, okay, I bought a $1 share of Apple here. It's moving, with this being one of the biggest moves in Apple's history this year in 2020. it's still only moving 80 cents. Is it really worth it? And then at the end of the day, am I truly empowered by fractionalized shares like Robinhood is touting? Yes, it lets me, to Michael's devotees of the show will remember Michael talked about cookies a couple years ago or a couple weeks ago. It lets me split this cookie up a little bit, but it doesn't create more cookie, right? Mm-hmm. Like I've got my Chips Ahoy here, and I can make it seem like I've got more Chips Ahoy cookies when I break it up a whole ton. But at the end of the day, I still only have, if I had $1,000 to invest and I broke up my Apple investment into $20 worth of Apple or $30 worth of Apple, I didn't create more money for myself. I didn't create more buying power, so to speak.
Mm-hmm. Yeah, I don't think there's not like a value creation component. I think a lot of people misinterpreted the stock split as that. I think there's a difference or we need to consider at least price versus market capitalization. And when you talk about a cookie, the same way as you talk about market cap, when Tesla split their stock or when Apple split their stock, the market cap stayed the exact same.
Sure.
You just broke it into smaller pieces. So it's not like the stock is on a fire sale. It's cheaper. I think you actually did some really cool research, Frank. You looked at the post-split behavior of some of those stock prices and actually moved to the contrary, if I remember correctly.
Yeah, not good. Not good. And you're seeing that yesterday and today in both of them. But yeah, it's this idea, Michael, of like, if you are investing or you're trading, and I don't mean this to shame anyone, but if you are investing or trading, you probably have more than a few $100s in your account. Mm-hmm. Okay. So fractionalizing the shares is a really cool idea. If like I'm, at the real beginning of an investment or trading account, and I want to quite literally buy a couple dollars of stocks. Mm-hmm. But what's truly an empowering thing is to take my few $100s, few $1,000s, those lucky enough to have a few $1,000s to be trading, and then beyond that, a $10,000 account, kind of energizing that money and not breaking up your cookie and not taking a market cap that's 2 trillion and simply saying the $2 trillion market cap, $400 stock price, now it's $100 stock price, and there are just 4 times as many shares, market mm-hmm. cap, 0 net change. Like that's not really changing anything. But what does change something here is futures. So with all of this context, Michael, why are we creating futures if Robinhood and Schwab are fractionalizing shares and Apple and Tesla are taking matters into their own hands and splitting their stock? Why are we even here?
To democratize access, right? So what we've done, buzzword, I know we love to.
There you go. Everybody take buzzwords here. Yeah.
But it's the structural difference between a stock and a future. As many ways as you can split a stock into tiny components, or you can actually split it from the issuer side, you don't get any more bang for your buck. The real cool value of a futures contract is this multiplier. So when you talk about the small stock 75 or the sticks or any of the small exchange products, they have this $100 multiplier. Mm-hmm. So while the price is $50, the notional value is actually 5,000. And you get.
And what am I going to have to pay for this small stock 75 here, Michael?
About $500. The capital efficiency that you're putting into the capital efficiency is kind of a weird word, but it's really it's bang for your buck, or it's extension of your dollar, or it's like your power up, right? You just get so much more use for your dollar in a futures construct or structure than you do in a traditional equity or a stock.
Yeah, absolutely. And so here's the thing, okay? A stock exchange, they create stocks, and you can physically buy portions of a company with those shares of stock. And that's a beautiful thing. And it's something that people have been doing for centuries. And the difference here with futures exchanges is, one, we're living in the world of equities for today, but as just like a quick aside, we can allow you to buy or sell quite literally anything. Like it doesn't have to be based on stocks. It could be, I'm looking at a big container of hand soap and something that maybe has had a volatile price for the last couple of months, given the pandemic that's still plaguing us. we could create a hand soap index, and we could have you trading, buying and selling hand soap without literally having to go to the Walmart or wherever and buying a bunch of hand soap for the hopes that prices would appreciate, and then going out. I don't even know how you liquidate that position on hand soap. Man, so many puns that we could hit right
no
now.
pun
But
intended. That was
I will
great.
will give away all of those to get back to the topic here, which is futures. They can track anything, but then also some people don't like futures because you're not technically buying ownership in any of those companies, right? But since you're not physically buying any form of ownership in Apple, Amazon, Microsoft, and a bunch of other stocks that are in the SM75 here, um, you can now have the exposure of those 75 stocks for a tenth of what the exposure is worth. And by that, you see here multiple moves of $500 to the downside and upside. But every day that you go to your platform and you want to buy or sell the stock market here, it's only going to cost you $500. And so that's the trade-off there. Like if you wanted to invest from the time you were 16 to the time you were 80, hopefully even older, I hope all of you out there live on into infinity. But if you wanted to do that, then yeah, buying a piece of the company and just holding it there maybe makes the most sense. But if you wanted to trade around, or you wanted some efficiency in an investment for a couple of months to maybe a year, a couple of years, futures truly do give you that power up, like you said, Michael, that bang for your buck, because $5,000 worth of stocks using Apple shares or SPY ETF shares is going to, at best, cost you $2,500. At worst, cost you the full $5,000. With sticks and SM75, two stock index futures that are right now worth about $5,000, it's going to cost you $440 and $570.
Mm-hmm. This is the novelty. This is the beauty of the futures contract. And I think a lot of people, when you talk about leverage, there's this negative connotation. And traditionally, that makes a lot of sense. We've heard about futures traders burning out their accounts, and it can be kind of painful because the old products were built for institutional traders. So what we've done is take that benefit of futures, the capital efficiency, the span margining they call it, and we've just scaled it down. So now if you want equity exposure, I think the S&Ps are $170,000 of equity exposure. You got to put up around $5,000. That's great. You're putting down $5,000 for that much exposure, but it burns a hole in your wallet if the market moves against you, like we've seen in these past 2 days. If you can keep that benefit of capital efficiency, but scale down the size,
yes,
that's the beauty of the small exchange futures contracts.
Because I would contend that leverage is it is a double-edged sword, that it's so empowering, but it's something that does need to be managed. But I would still contend that the number one thing that burns out an account or blows up an account, or all these different terminologies that people like to use, is size. At the end of the day, it's like you're saying, getting the leverage of only putting up 5 to 10% of what the thing is worth, and then the thing is worth $200,000. Whereas here, you've got that 5 to 10% number there, and getting that capital efficiency, getting that power up. But every day, these markets that we've constructed only move around $100 or $200. So as long as you're not, going away from your screen for days and weeks at a time, it's not something that's going to get out of hand. Whereas those traditional futures, Michael, on a day like today, especially, they're moving, $100, $200 in microseconds. And so that's the number one thing, is pairing that power up with the size that isn't going to be detrimental to your smaller account, because the small exchange is so named that we're looking out for the smaller traders. Of course, you can size those things up. You can get to 20, 30, 40 grand worth of stock exposure with a few of these contracts. That's absolutely doable. But at the end of the day, they're constructed for even the smallest traders. And aside from these one-off random moves that are specific to Apple and the stock split or what have you here, where it got higher than a broad stock market, the smalls are highly correlated to any stocks that you're going to really want exposure. And that's why we have the SM75, Michael, which gets you a very well-rounded stock market feel, energy, tech, financials, all of that good stuff. And then we built this Sticks product here to give all of the kids that are interested in technology a little bit more specific product. So the high correlation, the efficiency there, and the small size, truly empowering you relative to stock splits and fractionalized shares.